Today, I have a special guest on my program. Her name is Gina Covello, and she is a local real estate agent here in Los Angeles, and she agreed to come on the channel and talk about real estate with you guys here and give you the real deal of what's happening in the LA market. How are you, Gina?
Great, thank you. Thanks for inviting me.
Yeah, you're welcome. I'm glad that you agreed to come on. Most people are too scared to do stuff like this.
Well, you know, you always got to try something for the first time, right?
I agree. I'm glad you decided to do it. So just tell everybody a little bit about your background, like how long you've been doing real estate here and all of that stuff.
Sure. Well, thanks. I've been a licensed agent and broker for 22 years. I've also been a landlord. I've owned rental properties. I've flipped and I've built properties. So kind of a big expansion of background in real estate, and I've been doing it for a long time.
So you've done it all,
well,
for the most part. Let's get into like what you're seeing here in the LA market. First of all, what are you seeing right now when it comes to like buyers and sellers? Like, what are people thinking? What is the psychology of the market here right now?
Well, I think it goes back to that same thing of, you know, supply and demand. And, you know, we still have limited supply and we do have a demand. So buyers are still out there making offers. Sellers are still expecting to get their price, their listing price, and maybe even a little above, depending on how they've structured the pricing. So we're still seeing transactions, although the transactions are much less, obviously, than last year and the year before that and the year before that. So we're, you know, we're down, we're at fraction of what we used to see on a monthly basis as far as transactions.
Is that like increasing competition between local agents? Are you seeing like it's harder to get listings or working with buyers and stuff because of that?
Oh, absolutely. So, you know, as you know, we've got, I don't know how many millions of real estate agents that are part of the NAR. So, you know, there's limited transactions, and there are more brokers right now than there are transactions.
Right.
So most of every agent out there, their business has suffered or they've seen a decline. Even, you know, the large teams aren't seeing as many transactions as they normally see.
Now, do you see like a lot of people here in Los Angeles that kind of do this part-time? Because like in Miami, for example, we have the largest realtor association in the entire country. We have like almost 60,000 real estate agents just in Miami alone, not even the rest of the state of Florida or anything like that. So many people there get a license and they're like, well, we're just gonna close 1 or 2 deals a year when my aunt needs something or a friend or a girlfriend or whatever. Like, do you have a lot of that going on here too?
Yeah, absolutely.
Yeah.
I think will always have that. People, you know, it's super easy to get your license. And I think people see, you know, because of all these shows on TV, they think it's really easy to do this business. And
For sure.
they don't realize that it really takes a skill set and a lot of time. And But yeah, we see that here too.
One thing I wanted to ask you about that I was really curious is I've done a lot of neighborhood walks since I've been here in LA. And on several occasions, I've seen certain houses that literally are selling for less today than people bought them for in like 2016. I even saw one house a couple days ago where they sold it in 2022 for the same price that the house sold for in 2002. Like, could you like maybe shed a light on what's going on with that? I don't see stuff like that happening in Florida, so. That's
got to be kind of, it must be a one-off because I'm not seeing that. We saw prices have increased since 2012. And then, of course, since prior to the pandemic, we saw a huge increase in prices. What I am seeing is I'm seeing a lot of people that bought in 2020 and 2021 and only maybe owned their home for 2 years that are now selling. And they're either selling it for what they paid for it or a slight discount.
So obviously those folks are losing money. By the time they pay all the taxes and fees and commissions, they're going to be behind.
Correct.
And why are those people selling?
I don't know. I mean, maybe they have to sell. Maybe they've changed jobs, or maybe they're, you know, something, you know, lifestyle change. Who knows? You know, we've got a lot of things happening here in Los Angeles with the writers' strike and the actors' strike. We also last week We had the city workers strike for a day and the hotel workers striking. So I don't know, it seems like a lot of turmoil going on in the city.
So it seems like a lot of those people, they just want to get paid more, right? They're not making enough to live here because obviously the cost of living is through the roof here. So
Correct.
That's the main problem with that, right?
Absolutely.
Okay. A lot of these people who bought a couple years ago and they're selling now, I mean, that's kind of like worst case scenario for any buyer that bought recently, because not only are they losing money on the sale like that, but wherever they go next, they're going to be facing either high rents or, you know, even a higher purchase price unless they're moving to a cheaper metro, something like that. So I would think that people who are selling now really need that money, because one thing that I always hear people say in my comments, like, oh, anybody who bought and has the low interest rate, they're just going to turn it into a rental. They're not going to sell that house, but that's not what you're seeing here.
Well, I am seeing a lot of my clients are deciding to do that. I do have a few buyers right now that own homes and they don't want to sell because they have such a low interest rate. So we are seeing a lot of people that own a home that are now turning into landlords. We're seeing more and more rentals come on the market.
So are they able to rent those houses for the prices that they have to pay to carry those mortgages monthly? Because it seems like there's a huge discrepancy between what mortgage payments are here in LA and what rents are.
Yes, absolutely. And I think these are the people that have owned the home for a little bit longer. These aren't people that just bought it 2 years ago.
Right.
These are people that have owned it, I would say maybe 10 years, refied and took advantage of the low, below 3% interest rates.
Sure.
So they possibly can do it, break even, maybe make a little money on top of that.
Okay, so this is going to be a good point here. Like, we were kind of discussing this a little bit before we started here, and you said that you're seeing mostly that prices are still pretty high here. There's bidding wars still, and but some of the LA data that I checked before I got with you, it shows that the LA Metro as a whole, like all of LA County, is down 4.2% year over year price-wise. But if you look at certain pockets, like Malibu is down 7.2%, Santa Monica is down 7.8%, and but over here where we're at in Manhattan Beach, it's only down like 3.3%. And even though those price cuts are there and people are still selling for less, like, you're saying that you're not really seeing that or noticing that, and buyers and sellers aren't feeling that either here yet.
Well, I do think last year we felt it, so we saw prices go down as interest rates were starting to tick up. And then by the fall, we sort of felt, it sort of just, business sort of stopped for a while. And we thought, okay, what's going on? We thought it was going to go down again. But after the first of the year, and I don't know the reason why, but buyers started coming out again.
Right.
Interest rates kept going up. But there were a number of buyers that have come out, and, you're always going to have that supply of buyers, and you're always going to have, that supply of housing. And I think right now, it's just, there's not a lot of buyers, but there's just not a lot of housing.
The people that you've been working with recently then, has it been like more buyers or sellers? Like, what are they thinking? Like the buyers that did come out, like say if you worked with a buyer in the last few months, when things were kind of going back up during the spring housing market, like what is that person's motivation to buy in this market?
Well, the ones that I've worked with are either moving here, maybe transferred from another state or another area, so they have to buy, or lifestyle change. Maybe they somehow came into some money and they can afford to buy something, either going a larger property or downsizing. But again, most people are not out there buying right now or selling because of the interest rates.
So somebody that would decide to come in and buy right now, okay, and they had a lifestyle change or they relocated here, like what would push that person to buy instead of rent, I guess, is what the big question would be, because the price difference to own here versus rent is astronomical.
Well, again, I think, even though we have buyers, the buyer pool is small. So there aren't a lot of buyers out there. Again, I think it would be either they came into some money, or they're being transferred here from another state or another area, and maybe their company's paying for that. so that's an advantage for them to buy something. And that's kind of what we're seeing.
So it's really just people who are super privileged that are out there buying right now, essentially.
Right, yeah. The first-time home buyers struggling. You know, I think most of first-time home buyers are basically out of the game.
Yeah, especially in a place like this. First-time home buyers are pretty much out of the game, like you said, but even people who are established, you know, that have good careers and make good money right now would even think probably couldn't afford to buy here now when you're looking at most of these houses, $2–3 million, and that's kind of on the lower end.
Absolutely. I mean, that's why it's the market is, we're sort of at a standstill. There's not a lot of transactions. I had a buyer that I was talking to this past week. He makes a great income. He makes a lot of money, but he barely makes enough to buy a $2 million home. And he's like, this doesn't make sense. We already have a home. My wife would like a larger home, but then we can't travel. We'll be house poor. So he's out of the game.
And that guy's he's not a first-time home buyer, already has a house.
He already has a house, and another one that would say, I'm gonna rent it, keep it and rent it. But, you know, we talked about it, and it doesn't make sense for him right now.
What do you think would need to change here in LA in particular, in your market, for people like that to actually be able to be back in the game, or even first-time home buyers?
Well, I think we need interest rates to come down. We're not going to see more inventory, I don't think, in my opinion, until we see lower interest rates. Because if somebody lives in this home right here and they have a 2.75% mortgage, they're not going to leave to live in a house, the same house across the street, and pay double.
Right.
So they're stuck. Whether they want to move or don't want to move, they can't move. And I think so many people are in that.
Well, we're in this situation right now where a lot of people think that, oh, by this time next year, interest rates are going to be half of what they are right now, but that's probably not a reality.
No.
So that makes me wonder what the housing market's going to look like over the next couple of years, because, you know, life happens, people need to buy, they need to sell at some point, but how long do you think people can hang on for? Like, do you think realistically everybody's going to be able to just hang on and wait till interest rates are lower again?
You know, that's the $64 billion question. In my opinion, my thoughts are, I think if rates get down around 5, we'll start seeing movement. I think it's what the buyers, the consumers feel is a rate that they can handle. I don't think we're going to see 3% anytime soon, if ever again.
Right, I don't think so either.
But I think since we're like in the 7s right now, maybe in the 5s would allow people to start selling and then buying again. I don't know. That's just my opinion. You're
saying that transactions have obviously slowed down quite a bit. Now, how are things going for you right now personally? Like, is your business okay? Like, are you doing well enough? You've been in the business for a long time.
I've been in the business a long time. I'm doing okay, you know, but I'm not doing the transactions I used to do. I'm not doing the transactions I did last year or the year before or even during the pandemic. So yeah, I'm feeling it.
So 2023 has been probably your worst year in at least the last 3 years.
Oh, gosh, longer.
Longer than
that?
that?
Yeah.
Wow.
Yeah. So
okay.
not a great year so far.
How about this mansion tax? Because that's something that people keep asking me about, and I know it's something that you have a lot of knowledge about. So, you know, we saw this go into effect, when was it, in April or May?
April 1st.
April 1st, okay. And then we see that the amount of luxury listings and transactions have plummeted since then.
Absolutely.
So how does that affect you or the business in general? Like, you want to talk about that?
Sure. Well, it's called the ULA tax, and it's funny because they call it the mansion tax. However, it applies to all real estate transactions, whether it's residential, commercial, multifamily, land, industrial. So City of LA is huge. So it's made up of a lot of different neighborhoods. And for many years, the LA transfer fee or tax was calculated at 0.45%. And that's how the city made their money off of the transfer fees. Then they passed this ordinance back in April 1st that all properties that are 5 million to 10 million, there is this ULA tax of 4%. So now you have to pay the 0.45 plus a small county transfer fee, and this 4%. So now you are paying 4.5% on the purchase price of the property.
And the buyer pays for that?
The seller pays for that.
Seller pays, okay.
And transactions over 10 million, it's another 1.5% in addition.
Wow.
So builders don't want to build. The higher end builders don't, they're leaving LA. They're now coming to places like Manhattan Beach because it's its own municipality, or Malibu or Calabasas. They want to get out of LA because it's cutting into their profit.
So just to be clear, this only applies to the city of Los Angeles, not Los Angeles County, right?
Correct.
Okay.
Correct. Now, Santa Monica has their own, similar to ULA, and so does Beverly Hills. And it's just as bad. But I'm well versed on the LA. The LA just recently was passed, and yeah, we're seeing very few transactions above 5 million. And that's another thing. That's another problem in the city.
Right, because most of the houses cost more than that. So.
Well, not a lot of them do, but.
Yeah, exactly. So I mean, what is the motivation behind doing this? I mean, obviously California is known for gouging people when it comes to taxes and raising everything. And now you have this going on, and here in LA exclusively. Kind of break this down to two questions. Number one, do you think this is going to hurt or help real estate in the long run? And number two, do you see this like bleeding over into other areas of California, or you think this is going to be like a failed experiment?
I'm hoping it's going to be a failed experiment. This is all driven from the city trying to raise funds for the homeless.
Oh, right, that.
So, yeah, so this is supposedly for that. But really and truly, they were making more money on more transactions at the 0.45% than they are now at this higher rate because people aren't selling. So there's a lot of lawsuits coming out of this. So there's hope that this may get overturned.
Okay, so it's not completely like this is going to be like this forever, potentially.
We're hoping not, because otherwise, you know, it hits the hotels, it hits the people that own multifamily, you know, complexes.
Like you said, any parcel of real estate, right?
Anything, yeah.
That's pretty severe. I mean, and then, you know, they say it's supposed to go to help the homeless, but yet now LA's homeless population just went up like 9% year over year recently. Yep. And every time they throw more money at it, it seems to just get worse and worse.
I agree.
I did a whole video on this. I'm not going to get too much into that with you, but I did a whole video on this a couple of months ago because I saw a study here out of California talking about this. And basically what they broke it down to was, well, most homeless people say that they're homeless because they can't afford a place to live. But I mean, when you go past most of these homeless encampments and stuff, you can see that a lot of these people are very troubled and they're not looking for a place to live.
Correct. Yeah, they've done numerous interviews. You know, independent people have done numerous interviews with these people and asked them, hey, we have facilities for you. We have these tiny houses. They don't want to. These are people that are, you know, on the drugs, and they don't want rules. On the street, they don't have any rules.
Right. They can get away with whatever they want to do.
So I understand there are a number of people that have fallen on hard times, and of course we want to help those people. And we want to help everybody, obviously. We'd love to see people get back on their feet, but if they don't want to, you can't make them. Right,
exactly. So as somebody who's here in LA and you're, you know, paying the taxes and all of this, is that something that, you know, bothers you, and, you know, it's kind of like frustrating that you have to pay for all this even though the money seems to just be squandered?
Yeah, it is very frustrating. I myself live in a really nice neighborhood, lived there for many years, could walk to the restaurants, walk to a store. Now there's homeless everywhere.
Really?
And, you know, the home prices are, you know, $2, $3, $4, $5, $6 million homes, and you're walking past homeless people.
Okay, now this is something I've been wanting to ask you because when I was working as a real estate agent full-time, I always made sales, but I also did a lot of rentals because rentals were kind of like the bread and butter. Especially in Miami, it's a very transient city, so there's a lot of people always coming and going, and there's just more rental transactions to be had in general than buying at any given time.
Yes.
Especially now when prices are higher. So is that something that you see people doing here? Like, do you see a lot more people going after rentals versus buying? And is that something that you do as a real estate agent also?
You know, I've always done a few rentals here and there for clients, but now, you know, I'm open to doing more rentals as I'm seeing my colleagues are doing the same, because again, sellers are becoming landlords. So as you know, a rental may end up being a listing one day. So of course, yeah, so I am absolutely doing more leases these days than ever before.
Yeah, I mean, obviously they don't pay at the same rate that a sale would, but you do a few of them and it gets kind of close to a regular sale commission, and they're easier to do. Like you said, it can be a good source of clients in the future. The funny thing is, people say, well, real estate agents are struggling right now because the transactions volume is down. But if you really want to stay in the business, there are ways to make money. Like, that is one way. I know other people that used to get into property management when things got slow. If you really want to be in the real estate business, I think that kind of separates the people that, you know, have the motivation to continue with it and the ones that don't, because some people are just in it for the quick buck, like we talked about earlier. And obviously, you know, you being in his for 22 years, that's not you, so. Yeah,
you know, you got to stay in the game. And it's also a great way to keep in touch with people. And during these slow times, this is the time to cultivate, you know, relationships.
Yes. That
will bring more business in the future.
And it's not all bad either, because the rent prices here are pretty high, so you can make a decent commission off of a rental there, here and there. It's enough to pay some of the bills.
Absolutely.
Yeah, that's how I always looked at it. I mean, I could have done like 3 rentals a month and that would have been enough to pay all my bills.
Yeah, absolutely.
What would you tell a client right now that is maybe sitting on the fence, like looking at buying versus renting here in LA? Say they can afford to buy, like, okay, some people are just pushed into renting because they can't afford to buy at these prices. But say you have somebody who can afford to buy, but they're looking at, well, why am I going to pay this $20,000 or $25,000 a month mortgage payment versus I can rent the same house for $7 grand a month? Like, what do you tell someone like that?
Well, the differential isn't quite that extreme. I think if they're buying a house that's 25 grand a month payment, the rental's probably going to be more like
12, 15 grand.
18, yeah, somewhere in that range. You know what? I just sit down and talk to them about, hey, what are your wants and needs? What's your lifestyle? Let's talk about, you know, it's what they want to do. You know, you can lay it out on the table. Here are the pros, here are the cons. And then it's really up to letting them figure out what's really best for them.
And what do you think those people like kind of make their decision based on? Because obviously the discrepancy is just, it's almost double in a lot of cases, if not triple. What would their motivation be to buy? I mean, I'm having a hard time understanding it, both as a real estate agent, somebody that's looking at real estate here just out of curiosity. I can't figure it out.
Well, you know, I have to say, I think part of me wants to think that it's that fear of missing out.
You think so?
I do. I think in a way it's that, you know, when there's not a lot of inventory and there's a lot of people that want that, you know, then it makes some people want it more. And I think some people fear that there's going to always be a limited supply of homes, that they're never going to get a home. I think that could be part of the motivation.
Now, don't you think that's kind of a relatively new phenomenon in our business? Like, I haven't been in this as quite as long as you. I started right at the beginning of the housing crash. I got my license at the beginning of 2009, so things were just plummeting back then. And, you know, I saw people lose their homes. I saw a lot of distress in the market, so to speak. And Miami was one of the markets that went down 50% during the last housing crash. So I've seen what it's like on the other side of things. And I just feel like people who are feeling this FOMO right now and feeling like they're never going to be able to get into a house, you know, because it's never going to come on the market, it's always going to go up forever. What is your impression of that? Because you've been in this even longer than me. You've seen market cycles.
Absolutely. We do know that we need to build more homes. You know, we're lacking in inventory, we're lacking in numbers. I feel like also maybe the millennials have been sitting on the sidelines so long waiting, that they are fearful that they're not going to get in the game. Ever. And then I also think maybe some of it is maybe the parents are starting to release some of their wealth down to their children allowing them to buy.
Yes.
Because let's face it, baby boomers are from the mindset that you should own your home. So they are passing that on to their children.
Yeah, and baby boomers are sitting on the most real estate right now out of any generation, and probably have the most wealth as well, and they can do that.
Exactly.
As far as FOMO goes, it's kind of hard to justify to me, like, all right, you're going to pay a record high price for this home, and you really think it's going to go nowhere but up? I mean, that's really never happened before in the past, so I don't understand why people would think that now.
I don't know, maybe the pandemic created some of this. I don't know. There's this new fear. I think FOMO isn't just a part of real estate. I think there's a lot of fear of missing out in a lot of aspects of our life these days.
Like what?
I see people now traveling more, they're doing more experiences, they're spending money more than they have. I don't see a lot of millennials and Gen Zs don't seem to be saving that much.
That's right. I mean, we just hit the record mark right now with the credit card debt. I don't know if you heard about that. Over $1 trillion now in the United States, which is unbelievable because that means people are just borrowing more than ever. I did a video the other day talking about how the HELOC loans are way up. And this is something that's really being promoted right now because people are sitting on a huge amount of equity. And I'm starting to wonder, like, maybe this boom cycle can go on a little bit longer because people have so much money to borrow, but at some point that comes to an end.
Correct.
That's not going to last forever.
Correct.
And I'm just thinking, like, if that happens, you know, we're going to see a pretty bad downturn in the economy and possibly the housing market to go along with it when that debt bubble does burst.
Well, take for instance the commercial world. Look at all the office buildings that are in default right now. What, 75% of the buildings in downtown San Francisco are in default. Buildings everywhere across the country are in default. So we're seeing default in the commercial world. You got to think that residential's next.
Yeah, I mean, Elon Musk said it was, and you know, he tweeted about that a while ago, and I kind of agree because, you know, when you look at the dynamics of that, somebody's going to lose money with that. You're either going to have the owner of that office building lose money, or the lender's going to lose money, or maybe even both, when somebody can't pay and the building's now worth 50% less than it was when it was purchased. So when people start losing all that money, I think that's when you're going to start seeing things kind of change in general. I mean, there's all this sentiment how we've rebounded, the housing market's back up, and everything's going to be fine, we're going to hit that soft landing. Doesn't seem possible to me.
Well, yeah, I agree. I mean, how many banks have we seen collapse? Right. How many more are going to? I think those are the questions. Yeah. I don't know that I don't have the answers, but I think those are the questions.
Okay, so this is one I was really looking forward to asking you because you see this all over YouTube, especially like people leaving California. I know we've seen a lot of people leave California during the pandemic. Like, what has been your experience with this as far as, have you seen like friends, family, neighbors, clients leave California? What's happening there?
Yeah, absolutely. I've in the past year or two, have sold a number of properties that were friends and past clients that have just decided, hey, California's too expensive, so they're going to move. And they've moved out of state. They've moved to other states, and some have even moved out of the country.
And so when they say it's too expensive, what are they referring to? Like just everything, or just the cost of housing here? Or
the cost of housing, our gas prices are higher than any place else in the country, food prices, insurance. A number of insurance companies have pulled out of California. Allstate pulled out, Farmers. I mean, there's a number of other insurance carriers that are no longer going to insure. So that's going to raise rates too. I think you just see, you know, everything rising here, and it gets to be a little much. You can sell your house, you have some equity in it, and buy something really nice with some money in your pocket in another state.
Yeah, absolutely. And how long have you lived here before?
Oh gosh, I've been here like 30 years.
Are you from here originally or no?
No, I'm originally from Colorado.
Okay. So I mean, you've been here for a long enough time to see a lot of things shift here then. Is that something you would consider at some point, like as a resident, not even as a real estate agent, just somebody that lives here and has to fight this cost of living? Like, what's your take on that?
Well, you know, I've often thought about it. My goal is one day to live in Italy, so
oh, nice.
I'm a ways away from that goal, but sometimes I wonder if maybe I should you know, leave sooner than later. But I do love real estate. I'm licensed here. This is what I do. I've built my business here. You know, for now, I'm going to stay.
Okay.
I'm going to fight it out.
For the foreseeable future, you're here.
Yeah, I'm here.
I guess as a Florida resident, seeing our states are kind of like the polar opposites of each other, the number one drawback for somebody like me to move here would be seeing how many different taxes and fees that they levy on people. Even the state income tax is the highest in the nation. Like, all of these things. As a California resident, none of that stuff bothers you? Is that something that would make you want to leave? Is it something that really bothers you? You just don't think about it anymore after 30 years.
Well, it's not that I don't think about it. I have thought about it, and I've really thought about it in the past several years. You know, I may leave sooner than later. The goal was probably to leave in about 10 to 15 years, but that may shift. I don't like all the fees. I don't like all the taxes. It's getting more and more expensive. Like we just discussed, insurance is going up. All the costs are going up. So it's something I might entertain.
Yeah, I mean, it can only go so high, and they're pushing people out that actually earn a lot of money. And I'm just wondering, how much more can they keep raising taxes and things like that here, that it just pushes so many people away that the whole state just suffers big time. You know, I don't know how much longer that can go on for. I look at states like here, like there's a massive deficit here right now, but in Florida we run at a surplus, so it's just like a total opposite thing. So it's like, all right, well, you're charging all this money, you're charging everybody all these taxes, but at the same time people aren't getting what they're promised from that.
Yeah, I don't know. I don't have the answers to that. It's frustrating.
Well, I really appreciate you coming on today, Gina. If anybody out there watching wants to get in touch with you, how should they do that?
Please call me. My number's 310-251-8280, or you can email me at gina@ginacavello.com.
And you cover all of LA, or?
Pretty much LA. I cover the Valley, I cover Hollywood Hills, I cover this side of the hill as well.
Awesome. Well, thank you so much for being on my show today. I wish you luck in your real estate journey here in LA. If you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next one to come out, check it out right over here, and I'll see you in the next one.